Hey everyone, how are you? Welcome back to news trading session number 2. We are going to continue some theory and practice. Hopefully, we should be able to get some examples coming out of today, and definitely want to push out some of the stuff there. And for tonight, we are actually going to, let me fix the camera. Sorry, so for tonight, we are actually going to go through some of the stuff to prepare for tomorrow, which is going to be the inflation number. So we'll actually spend some time to talk about that as well once we are done with our theories for tonight. All right, so this is session number 2. This is going to be theory and practice. My name is Peter Njaro. Let's get started with a quick disclaimer. Any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility and market reactions to news can be swift and very unpredictable, which leads to high trading risk and delays in order execution, which is something we actually experienced last Friday. So be very attentive when determining the volume of your transactions and consider all possible risk factors. Typing in 0.1 lot versus 10 lots, it's a huge difference, and sometimes people do that in in a rush, right? So be very careful. Okay, so there are going to be bonuses for today as well. We'll show you the promo code. That's going to be 100% deposit bonus to double your deposit, and you should have access to the private Telegram channel if you registered through emails. All right, so you should have all that. Okay, cool. So this is going to be the code. It's non-farm 2024. So make sure you are using this code to double your deposit, and it is valid until the 31st of December 2024. Make sure you apply this code when depositing into your Octa trading accounts. All right, otherwise it's going to be quite a waste because it is a 100% deposit bonus, or it's a double deposit. So if you deposit 100, Octa is going to give you that $100 bonus. If you deposit 1,000, Octa is going to give you that 1,000 bonus. Okay. All right. Just a little bit about myself, just in case you missed out or have never attended my sessions before. My name is Peter Njaro, and I've been a full-time trader with over 20 years of experience. And I am a professional trading coach and also a technical analyst for some of the largest brokers out there. And I'm an expert in Ichimoku Kinko Hyo. That's a Japanese trading techniques. If you want to know more about it, we have done some webinars on this. So if you search Ichimoku in the Octa broker channel, you should be able to find it. And I've also been invited as a guest speaker at the Trading Investing Expo across Australia, Invest Fair in Singapore, as well as the ATAA and APTA conferences, which is the Technical Analyst Associations in Australia. Okay. All right, so some of the stuff we're going to go through today, we are going to talk about the advantages and disadvantages of news trading, the most profitable news for trading, 3 main phases of price movement, and I cannot stress this enough that a lot of people are actually not paying attention to these main phases that happens in the market, and we need these phases, right? If we don't have these phases, it's going to be a really hit and miss for the trading the news, especially during the NFP and especially during the inflation number, which is going to get released tomorrow. You need to have one of the phases here, otherwise the strategy will not work. So we will focus on this one here a lot more. I think some of the feedbacks that I've been getting is a lot of people still do not understand what phases they need to focus on. So we'll try to find some examples here, and maybe we'll give you a little bit of a brief into what happened last Friday, where we actually didn't see some of these phases there. It does impact the trade significantly as well because it causes a whipsaw before heading to one direction. Okay. Obviously, some general rules to lay down here for news trading, and then we'll take a look at the pending orders, and then we'll take a look at the buy stop and sell stop strategy. If you have attended previous sessions during our live sessions, this is the main strategy. This is the bread and butter. And when it comes to news trading, It is very effective, but you need to be really quick when trading with these orders, okay? The other one is going to be the buy limit and sell limit strategy. This is a little bit more on the advanced side. We will take a look at it, but if you have any questions, I need you to stop me and do ask your questions, because buy limit and sell limit strategy, it is very advanced. It's not for beginner. I wouldn't classify this as a beginner strategy, but it is there as part of a news trading strategy. Okay, all right. So let's run down some of the advantages first. What I like about news trading: all the necessary information can be found in the economic calendar, so there's no need to delve deeply into technical and fundamental analysis, okay? For example, I'm going to share with you the trading news here on trading economics. This is the one I like to use. It does give a much more detailed analysis and also the forecast, and a lot of the sources out there when it comes to the fundamental data are actually taken from trading economics. So this is actually the go-to if you are looking into trying out fundamentals and you want to get data and forecasts that are actually more accurate. Okay, so all this information here is already there, and what I like about this is that you can actually filter this out. Okay, so I can go into countries, and I'll take a look at this one here. Maybe I don't need Argentinian data. I don't need stuff from Brazil. I don't trade Brazilian real, right? Canada, I'll leave it there. China, very important if you're trading gold, and a lot of you gold traders are not paying attention to what's going on in China. So that's definitely number one, that a lot of people just kind of just ignore it, or they didn't realize how important the Chinese data is to the global economy. It is obviously one of the largest economy out there, and in terms of production, it can be big. So demands in the market, especially coming out from productions, we look at China. All right. Euro area, France, I'm just going to leave it there. India, I don't need it. Indonesia, I don't need it. Italy, Italy and Spain, it's hit and miss. You need it? Personally, I don't need it, right? The IMF numbers, I need that as well. Sometimes they do really sound important stuff. Now, Mexico. Now, if you're probably wondering, why is Brazil, Mexico, India, all of them are in there. Indonesia is even in there, because they are the 20 largest economy in the world. If you're thinking about G20, these countries are actually part of the G20, so they're actually there, right? So I don't need Mexico right now. I don't need data from Saudi Arabia. Singapore, even though it's a financial hub in Asia, I don't need their information there in terms of the monetary policy. A little bit more of a controlled situation over there. All right, South Africa, don't need it. South Korea, definitely don't need it. Spain, yep, don't need it. Turkey, don't need it. The rest, I'm gonna keep it there. So I'm gonna save it. And it's gonna kind of list on the list here. So, no excuse. And this is why it's actually good, right? Because just on around 1 p.m., you should be looking at the unemployment rate number from the UK. Obviously, we get a little bit of a weaker number there for the unemployment rate. Does it have an impact on the sterling? Of course, it does have an impact on the sterling, but does it start moving before or after 1 p.m.? It started moving after the data is released, right? It takes time to process that information as well. All right. Hey, everyone. Thanks for joining in. All right. Look, if we have the time, we will take a look at some of the market as well here. But the main focus for tonight, I do want to talk about the theory, and I really want to go in deep a little bit here. Okay. Now, tomorrow, numbers going to get released early in the morning in Asia. You are going to get Chinese inflation rate tomorrow, right? Year-on-year inflation rate, which is actually pretty small. We're looking at a potential for inflation in China to pick up from 0.3% to 0.4% growth. Still considerably low there. It is actually pretty low inflation. I wouldn't say it's super expensive, right? And then we have the UK GDP number at 1 p.m. You want to trade the Chinese data, wake up early in the morning. 1 p.m., this is 1 p.m. my time. I'm in Asia right now. I'm GMT 7, right? So, change it to whatever you want it, all right? It could be, it is actually morning in the UK. So if you're living around, if you're living in Africa, I think you guys are about a couple of hours behind where I am, right? So it will actually be about morning your time. If you're in Africa, I believe it is going to be morning your time. So I think time zones wise, Africa and Europe, it's not that much of a difference, right? It's not going to be a huge jump. Okay, so you get, you already have this information. There's actually no excuse. You know when to trade, right? I'm not going to be waiting for the whole day tomorrow, wondering when is the CPI numbers actually going to get released. CPI numbers going to get released early in the morning in the US. So, that's the time I want to be on standby. Okay, so inflation number is going to get released tomorrow. We'll come back to this. We'll talk more about the inflation number later on. All right. So there's no need to delve deeply into technical and fundamental analysis. Why do I say this? All this information can be found on the economic calendars. Do you need fundamental analysis for it? No. It's good if you understand what it is, right? Do you need it? Like, do you have to have 100% knowledge in terms of understanding how the economics of the world works? No, you don't. All right, this is the fun part, okay? Because news trading is not fundamental trading, okay? News trading is not fundamental analysis. We use a separate trading strategy, and this is where it gets a little bit more on the fun side, okay? Now, number 2, events and calendars are ranked in order of importance, which helps in making adequate decisions. Now, let's go back to the calendar here. I do want to show you what's going on. There's a lot of data here. Are all of them important? Look at tomorrow, right? Let's take a look at tomorrow. I can go down the list here. I can easily see 50 news, right? Happens around the clock there, but any of them important? All of them important? Probably not. And this is where you are actually able to filter it by impacts. I don't need low impact news, right? Again, not all news releases are going to be the same. Some of them doesn't move the market, but we are going to be looking at the high impact ones. The high impact ones will definitely move the market. So if you take a look at the high impact data tomorrow, what do we have? Just now we just filtered out 50 releases, data releases in one day tomorrow. We'll filter it down to just 6. Okay, we got inflation number from China. Headline inflation is the one you want to watch out for. GDP growth per month is what you want to watch out for tomorrow in the UK. We're expecting a drop from 0.4% growth to 0% growth. So GDP might actually slow down in the UK. All right, the economic growth is going to slow down. That's going to have an impact on the sterling. So we know that. So I want to be on standby. I have to be there. Especially if you're trading cable, if you're trading the pound USD, if you're trading the sterling yen, if you're trading the euro pound, you want to be there for the GDP numbers tomorrow. So you are actually well prepared. You know when the market is actually going to move. Okay, the key word here is you know when the market is going to move. What's the worst thing that could happen, right? We do our analysis. We open our trades. It doesn't go anywhere, right? We got frustrated. We close our trade, and then the markets start moving. You know how frustrating that is? Because it's actually going to add another mental burden to you. So regardless whether or not you trade fundamental analysis, it's always good to understand that market moves because there are news that impacted the market. And this is why this is actually not that hard. You actually know when to trade. It's super simple, right? And then obviously we have the inflation number tomorrow. Core inflation, headline inflation, core CPI year on year. That's what we want to watch out for. That's basically the benchmark for the FOMC. Headline inflation, we do want to know whether or not consumers are actually paying more. So these numbers can actually get filtered out. And that's it. It's not hard. We just filter out 50 to just 6. And makes things simple. And this is why it is an advantage, because if you understand news trading, you will understand that not all those data that's actually going to be released is going to impact the market. You really want to go for that high impact trades, okay? Now, publication of statistical reports noticeably increases volatility. We saw that. There's no denying it. We saw what happened during NFP last Friday, right? Allowing traders to potentially earn significant profit. You get in and you know what the damage is. I can bring it up right now. It's actually not that hard. Take a look at this drop here. This is just a 1 hour candle drop on the Euro USD, and it ends there. Let's measure it, right? From the moment the data gets released all the way until the market closes, it is 100 pips, right? That's 100 pips without even wondering what to do, right? If you take a look at the first drop here, that's 75 pips. I can go on to a small time frame. Take a look at it on a 5-minute time frame. It all happens in what 5 minutes? That 75 drops happens in 5 minutes. That's a huge drop, right? If you're in the right direction, that's a lot of gain. And sometimes we wait it and we don't get 75 pips. You want to take a look at it, what happened with the range on Monday? I'll show you the range on Monday. This is actually the range on Monday, right? If we measure the range on Monday, it's let's see, let's bring up Monday, and I'll show you. It is about 46 pips in terms of range on Monday. Yeah, 49 pips. So one whole day's range on Monday. That was just 50 pips, 49 pips. You get that in 5 minutes from that NFP released last Friday. So it is a huge move in the market. So instead of waiting, oh, I gotta wait for the whole day, the market is not moving, you jump in at the right time, you trade the right thing. That's a huge gain in a short period of time. Yeah, obviously this could actually backfire as well. But it is a huge volatility in the market, and that's basically what traders want. Okay? Now, simplicity of a strategy. You need to know how to open and close orders. That's a pretty given, right? If you don't know how to open and close orders, you're going to be in trouble. Trading's not for you. But if you're here trading, you're listening to me right now, you do know how to open and close orders. I don't think I need to doubt that. Okay? Without needing to learn any complex formulas, the stuff that we're going to cover tonight, those pending orders, that's all you need. You don't need to you don't need to measure whether retracement is going to be good if you know how to, right? That's going to be a bonus advantage because you know where price is likely going to get rejected. But do you need to understand it when it comes to niche trading? Probably not. You know why? Because when data get released, especially huge numbers like the NFP numbers, CPI numbers tomorrow, we could get a lot of whipsaw. It will actually create a lot of noise. It will actually causes chaos when you're using your normal analysis, right? So that's the thing. Okay, so minimal time expenditure, we already explained that. You know exactly when to access the trading platform, right? When is the data going to get released? Oh, it's going to get released in an hour's time. All right, I'll be on standby half an hour before data got released, right? That's what we do every single month, right? We trade the NFP, we'll trade the inflation number. Every time we do that, I even have time to explain some of the theories to you guys for 20 minutes before actually setting up my orders. It only took me 5 minutes to set up my orders, and that's it. If you do that, you can actually, if you're used to it, that's all the time you need to kind of set up your orders 5 minutes before it. In fact, we prefer to trade it 5 minutes before it. We don't want to set up positions long before the data get released because a lot of things can happen. But the last 5 minutes, what happened is before data gets released, market typically freezes, right? It doesn't move. It doesn't cause a lot of significant shift in the market before the data gets released. It will only move after the data gets released. Okay, so just keep that in mind. Okay. So, if you understand some of the strategies that we talk about, I like to straddle the market. That's the straddle strategy. This is the buy side and the sell side strategy that we are going to explain tonight. I'm going to give you the pointers on how do you actually look at that and how to actually set it up, okay? But once you understand that, that's it. Trading process itself, it can be completed within minutes. I think last week, I'll let it run a little bit longer than what it is, but typically, I don't really want to stay too long in the market. 5 minutes is usually my limit. If I can get my profit within 5 minutes, I would get out. The reason why we stayed on last week because we still need to manage the trade because there was a whipsaw and some of the trades was kind of open up on both sides, which is a danger. Okay. And those are the advantages. Now let's take a look at the disadvantages here. Okay. Disadvantages. Market situation doesn't always develop as predicted by logical thinking and common sense. So, let me explain. Last week's NFP number, that was a little bit unique. So let me go back to previous week, and I want to show you the numbers, right? In fact, we actually discussed this during the release of the data. So we have the NFP number being really high. Market was expecting 185,000. We got 272,000. That was a surprise to the upside. Average hourly earnings was high as well, 0.2 to 0.4%. The unemployment rate was actually bad. This is actually bad, 3.924%. So let me pull up the chart on the NFP, sorry, the unemployment rate. You see this? The unemployment rate is actually really bad. For the whole past year, for the past 12 months, we've never seen the unemployment rate at 4%. I would go even further. Let me show you the 5-year rate here. We are at 4% here. The last time we were at 4% was actually January 2022. Do you know how long that was? That was 2.5 years. For 2.5 years, the unemployment rate never go up to 4%. So if we take a look at this, we think about it logically, that's actually pretty bad for the US, right? But no. A lot of traders don't even care about the unemployment rate. Do you know why? Because a lot of traders don't even know why they're looking at the unemployment rate. All they care about was the NFP numbers. NFP number was good, higher than consensus. Market just react to it. It makes the US dollar stronger. That's pretty much it. But if we know the whole thing, it is actually pretty illogical because we are actually getting a mixed data. It's not supposed to be super good for the US number. But, the unemployment rate is high. How's that going to impact the market? We don't know as of yet, but I think that could actually be brought up at tomorrow's FOMC meeting decision. Okay, so that's one. Sometimes it doesn't make sense. Sometimes it's illogical. Sometimes we look at the number that's bad, but the market reacts positively to it. Sometimes the number is good, the market reacts negatively to it. It could happen. So there's no guarantee that every news that's going to get released will have the same result or will have the predicted result. Sometimes the results and how the market react to it, sometimes it is actually pretty illogical. So there are actually some risk factors here. Okay. Now the other two, second disadvantage is that not all news can cause significant market reaction. It is a disadvantage if you don't understand how to filter the news, right? If you don't know what you're supposed to be looking at, if you don't know what news to focus on, it will be a problem for you because you're going to be wasting a lot of your time. Okay. The third one, as I say, it could be beneficial to you, but if you get it wrong and you analyze the situation incorrectly, you may experience significant losses, right? The 75 pips that I showed you just now, that could be a profit. At the same time, if you don't have a stop loss, that would destroy your account. Simple as that, right? So it comes down to risk management. All these disadvantages, I think we can work around those, okay? Maybe except number one. But number one, it's going to be really hard. Sometimes we have to read the sentiment in the market. We have to look at the context. So I think number one is going to be a problem no matter what. But number two, you can filter the news out, so you're not going to be wasting your time. Number three, if you have the right risk management, I don't think it's actually going to be a problem because we're not randomly just opening position, hoping that, it'll turn around and stuff like that. If it goes wrong against you and you have to immediately cut it off, at the very least, you would need to have a stop loss, right? And that's part of your risk management. So if your risk management is good, I don't think this is actually a disadvantage. So think about it. You actually have a lot more advantages trading the news here. Okay. Now let's take a look at the news that could be very profitable. Now we need to divide this into two categories. Obviously, number one, we have the unexpected news. Okay, these are unpredictable news. It could happen any moment. It could happen in the next 5 minutes. I don't know, right? If there's an earthquake in Washington, D.C., for example, the White House got destroyed. Is that unpredictable? Obviously, that's unpredictable. Is that a shock? Obviously, it is a shock, right? Center for the Governance in the U.S. got hit by earthquake, one house got destroyed. How is that going to send a reaction to the market? It's going to send negative reactions to the market. Okay, right. So unexpected news. What are they? They could include terrorist attack. 9/11. Obviously, that's a terrorist attack that has a huge repercussion onto the financial system as well, right? Military conflicts, Russia, Ukraine, Israel, Palestine. These are conflicts, and we don't know when they're actually going to start, right? It typically just happens suddenly. There's no warning unless I'm working with the intelligence body for a government. I wouldn't have that information, right? Even if they have that information, they're not going to disclose it, not to create panic in the world anyway. So, to us, everyone else, it is going to be unpredictable, okay? Natural disasters, super unpredictable. We don't know when a volcano is going to erupt. We don't know when a tsunami is going to hit. We don't know when a huge earthquake is going to hit. Obviously, that's unpredictable, okay? There might be some telltale signs, but unless you are working for the meteorology bodies for a government, I don't think you're going to be able to figure it out, okay? So during such times, currencies typically does get stronger as well because the stock market crashes, right? We have a run to a safe haven. Typically in this context, we usually see the US dollar stronger, right? Safe haven assets, we saw US dollar stronger. Japanese yen, some people still consider it safe haven. I don't really consider it safe havens anymore. It's a completely different story there. The Swiss franc, it is still considered a safe haven. Sometimes it gets stronger as well. Assets like gold, depending on the situation, it does get stronger as well. So safe haven assets typically goes up if there's this unexpected news. Now, this unexpected news, unfortunately, pretty much 100% of them that move the market are negative news. No such thing as a good unexpected news. Okay, there is no such thing as a good unexpected news. Okay, 99.9%, I guess. I'm just leaving the 0.1% there as something good that could happen. I don't know. Maybe tomorrow the world is just gonna announce, hey, we have achieved world peace. That could be positive news, but I doubt that's gonna happen, right? So unexpected news, typically negative news, and the reason why negative news cause such an impact into the market, it's easy to sell and instill fear in humans. All right, simple as that. We just like that. We look at negative stuff, and we will amplify that negativity. That's pretty much it. All right. Periodic news. These are the news that we are keeping an eye out every single month. Right? Comes out regularly. You got central bank meetings, monetary policy decisions, and for the FOMC, this is actually going to be right after the CPI tomorrow. Right? It's actually going to be on Wednesday. If you're in Asia, it will actually be past midnight if you're in Asia, or if you're in Australia, that's about early morning in Australia, about 3 a.m. in Australia, right? So central bank meetings, monetary policy decisions, and forex market does react to them when they raise and lower interest rates. Quarterly GDP reports, we're going to get one tomorrow from the UK. We're going to get the monthly GDP reports. Inflation, that's also tomorrow. So CPI is actually tomorrow. So what do we have? We have UK GDP tomorrow. We have the US inflation number tomorrow. And we have the FOMC interest rate decision tomorrow. So it's like Traders Day out tomorrow, right? Everyone's just going to go nuts with all the fundamental release in the same day tomorrow. So yeah, I'm expecting crazy movement tomorrow. We might see one directional. We might actually see a little bit of a market reversal. I don't know. Data's. We can have our view on it. We do have our consensus, but is it a guarantee? We don't know yet. Okay, so that's tomorrow. A lot of stuff tomorrow. So be very careful. Right? Index of business activity in manufacturing and services. ISM manufacturing PMIs. This is actually very important. We have the manufacturing numbers. We have the manufacturing PMI. We have the services PMI. This is going to have an impact into the market because right now, especially in 2024, we want to see manufacturing and services PMI not go down, right? Because if they start coming down, it would actually be the earliest indication that the economy is potentially not growing, okay? Unemployment data, labor market, right? We saw that last Friday, so we already passed that. So think about it. What do we have? If you run down all this stuff, so what are the good, profitable news? Simple as that. We want to look at those periodic news, and I can list them by how important they are. Number one, monetary policy decision, interest rate decisions, right? That's number one. Number two, what else do we look at for number two? We're looking at inflation number, okay? So it's monetary policy, inflation number, and then we have the labor data, which is the NFP, unemployment rate. So that's already 4, and then the rest is going to be GDP, and then the last one is going to be the PMI numbers, right? So purchasing managers index, right? This is what we want to look at. We want to see if manufacturing grows. We want to see the services sector grows. If they grow, they might lead to a higher GDP, right? So all these factors actually comes into the GDP itself, because labor data contributes to 80%. The NFP actually contributes to 80% of the US GDP. So if the NFP is high, we would expect the GDP in the US to be high. In addition to that, we'll look at the manufacturing number in the US. Are they high? Are they above 50? If they're above 50, they're growing. This is going to give us an insight into what the GDPs are. But these are the 6 data. This is pretty much it. You want to focus on 6 things from every country. Focus on this, right? Number 1, interest rate decision. Number 2, inflation. Number 3, we're looking at the labor numbers, and then we have the GDP numbers, the PMI numbers, okay? Simple as that. These are the main focus for you guys. It's actually 5, not 6, okay? But that's how we rank it, right? So we're halfway through the session, and this is super important. I want you to take a look at what we have on the slide here. These are the 3 main phases of price movement. This is actually a chart that I use in a lot of the presentation for a lot of topics. All right, we can talk about the market economic cycle. We look at this. We look at the market structure. We also look at this. The same thing with trading the news. We refer to this, right? Before any news releases, out of the 3 phases, I don't want you to focus on number 2 and number 3. I'll explain what's going on. So, before the news gets released, you want to see the market in an accumulation phase. Okay? Market goes sideways. Why here? Smart monies are going to be here. Huge funds are going to be here. People that know what they're doing is going to be here. So this is where the most informed and forward-thinking insiders trade. Okay, this is where we want to set up our trades. Before the news gets released, we want to be there. We want to be prepared for when the news gets released. Participation phase. These are the technical traders, right? Oh, they saw a breakout. They jump in. They participate into that breakout. Simple as that, right? Accumulation. Big funds are accumulating their positions, and they causes that breakout to happen. Breakout happens. People that understand how to look at the chart, they jump in. This is participation phase. And then when it's rallying up really quickly, that's going to be a distribution phase, all right? i.e., people that jump in during the accumulation and participation phase starts closing the position, all right? So if I open a trade, right, some of you guys attended my previous sessions. Sometimes I trade for 1 minute or 2 minutes, and I close out my position. All right? I take my profit, I get out. Okay? When I get out of my position, do you know who else buy in? People that get the information late. Okay, people that just maybe saw the news on TV and they want to react to it 5 minutes or 2 minutes after the news gets released. Is it a long time? For us traders, it is actually a very long time. Information is key. Knowledge about something before the news gets released is obviously going to be the thing everyone wants it, right? But if someone gets the information 5 minutes after the release, it is actually going to be too late, right? This is where the public enters and they are actually receiving very outdated information. Okay, so smart money is going to liquidate their position here. Participation phases are going to liquidate their positions here. This is where we saw a stall. So let me go back to the chart here. I want to show you what happens here. So take a look at the Euro USD. This one drop, this is where the market goes nuts, right? What we want to do is we actually want to look at the accumulation phase before that. So we saw the market actually goes flat, yeah? Breaks in, some trader maybe jump in there. If we take a look at the 1 minute time frame, I'm not sure it's actually going to show up on the 1 minute time frame. I doubt it's actually going to show up on a 1 minute time frame. But nevertheless, this is our accumulation phase, right? Market breaks to the downside. And this part here, you realize what's going on? It stopped moving by about 75 pips, right? All of a sudden it just goes slow, right? It doesn't dip down anymore because this is actually the participation phase. And down here on Monday, maybe people that come in with late information, they trade on Monday. This becomes a distribution phase. What happens during distribution phase? It refuses to come down. It is actually very hard for it to continue to come down. So you have to understand, what do you want it to be? Do you want to be at this area here? That's your potential move, right? Or you want to be halfway there after the data gets released? Yeah, sure, you can participate on the breakout. Yeah, you still get something out of it. But if you trade on Monday, you're trading on outdated information, you sell. It doesn't go anywhere, right? Barely gets about 20 pips in terms of movement. Okay? So this is why it's very important. We have to understand the 3 phases here. So a lot of people just ignore it, okay? Now let's take a look at some of the general rules for trading before I actually start showing you what's going on here. Study the market, analyze the dynamics of the currency pair. Obviously, you need to do that. Assess the reaction of a currency pair to the latest news. Yeah, that's a given. Prepare for trading by marking relevant levels on a chart. We do that before we do our trades. Decide on your trading tactics, including when to open and close your order. All right, what's your trading plan? Choose an appropriate trading time frame. You want to look at it from the 5 minute time frame, 15 minutes, an hour. Determine the maximum risk for each order and consider using stop loss or maybe trading stops. Okay. Also, decide what you want to do with it. Okay. Every time I go into a live trade with you guys, every single month, my goal, my decision here is that if the market can give me that profit in the shortest period of time, I'm out. I'm not greedy, but I just want to take advantage of that short-term burst, short-term volatility, get in, get out. That's how I trade news, right? If the market lets me out in 1 minute, I'll be very happy. If the market says you got to wait for 5 minutes, I'll be happy. But I wouldn't be holding my position for a day after that trade during news releases. That's the thing. You have to make a plan. You have to understand. You have to make that decision. You want to be in there for a quick period of time, or you want to be there for a very long time. You have to decide. Okay. All right. So moving on, these are the 4 pending orders that you're going to find in your trading. So we have the buy stop and the sell stop. Now let's explain the buy stop. Buy stops are order placed above the current market price and you expect price to continue to rise up. Once it hits that buy stop, it means you have a buy position or a long position. A sell stop means you place that order below the current market price. If market goes down, hits your stop loss, hit your sell stop, it will open a sell position. Okay, so those are stop orders. So think about them as orders that cut through. Simple. Now the other one is sell limit and the buy limit. You can look at the graphics here, right? What's the sell limit? Sell limit are order placed above the current market price. But what you want to do, what you really wanted from the market is I want to sell the market, but I don't want to sell at this current price level. You know, I think market could go up a little bit, test a little bit for resistance. I want to sell at resistance, you know. So when market goes up here, resistance gets rejected, you already have a sell position at that sell limit up there. Same thing with the buy limit. If you're expecting a bounce from the market at the bottom, then you can actually place the buy limit. Market goes down, hits that level, it triggers a buy. It doesn't trigger a sell, it triggers a buy. And then when it bounces up, you get a very good price for it. Okay, so that's the buy stop, that's the sell limit. Now let's take a look at the buy stop and the sell stop strategy first. Okay, so the buy stop here, obviously we have this corridor of volatility. Obviously this is going to be the accumulation phase before we actually trade. This is what we're looking at before we actually place our trade on the NFP, before we place our trade on the CPI. Okay, so we have this range, it goes sideways. You know, you want to place an order above the range, okay, and then a sell stop below the range. So if it goes up, I want to go long. If it breaks to the downside, I want to sell. Simple as that. So in this case, you can see what happens here. This is probably an NFP release. You can see how it spikes up, it shoots up, hit your buy trade. You're not buying up there, you're actually buying where the buy stop is located. So you know the market is moving in one direction already. The news reaction is actually very quick, right? It could all happen in less than a minute. So make sure you have the buy stop so you don't miss out on things. Once the buy stop got triggered, you have your stop loss there, let the market run, and you can actually move your stop loss to break even if it goes even higher, just in case if it reverses, it's going to hit you at break even. And this is a strategy that we employed last week as well. We have some running positions, we're actually profitable, and then we move our stop loss to break even. Okay, so when it comes back, we didn't lose anything. It becomes a risk-free trade. So that's the beauty of it, you know, once we have a running position that's actually positive. Okay, so that's the sell stop and the buy stop strategy. So you really want to look at this. You need to understand that you need to be able to identify a corridor of volatility. So we can actually see that corridor of volatility on the Euro USD. It wasn't existent on the Pound USD. Okay, so let me explain here on the Pound USD what's actually going on here. So if you take a look at the Pound USD, it is actually not in a range unless you want to take the bigger range, which is this, right? But then it's kind of pointless because the breakout happens on that smaller box up there, which is about here. Now, we don't have that corridor of volatility because before the news gets released, what happens here with the Pound USD is that it continues to create a new high. It's actually not moving in a range bound market condition. So what we end up getting is, and this is probably partly my fault as well on last Friday, because we didn't actually identify this, I failed to identify this as kind of a range, right? In fact, I actually consider that top up there to be the top of the corridor of volatility. And what happened was on Friday, if we take a look at it on the 5-minute time frame, let me go back a little bit on the 5-minute time frame. So I'll show you how it is step by step. On the 5-minute time frame, so right, so we have our corridor of volatility. This is what we get, right? Before the news gets released, this is what we saw. What happens here is, you can see what happens here. It still goes inside the range, right? So what you do is you create a buy stop here, right? You basically create a buy stop, which is over there. So if it breaks there, then you actually want to be in a long position. And at the very same time, you create a sell stop here. So if it breaks to the downside, you're actually going to be selling the market. So this is a strategy that we did last Friday. Just to give you a little bit of an illustration on what's actually going on. So that's how it is, right? Corridor of volatility, that's my buy order, this is my sell order. Look what happened here. All right, pay close attention to what happened here. See that? It triggers the buy stop because price went above that corridor of volatility and then immediately slides to the downside. So what I end up having was this could be a problem, and I'm just going to be frank with you. I'm going to show you there are actually weakness in the market there. Could it be avoided? Maybe it could, right? Because we didn't have a proper corridor of volatility. So I actually want to stress out how important that corridor of volatility is. So what we got in here is actually got a whipsaw. So we got the buy stop triggered and sell stop triggered. So I was actually hedged perfectly. So buy stop got triggered, and then sell stop got triggered. So it is a very confusing situation. Sometimes we get that, right? So this could happen. So just make sure you understand what you're doing. So we actually do want to look for that corridor of volatility that I just showed you on the Euro USD, right? That's what we want to see. We want to have that corridor of volatility, just to avoid whipsaws in the market. We want to have that range, okay? Accumulation in the market, we say that. All right. So I'll just show you the example. The other one is the buy limit and sell limit strategy. Again, this is a little bit more on the advanced side, right? You need to understand the, some technical analysis behind it. So what we're looking at here, if we take a look at the chart here, that was a previous high. There was a little bit of an order block building up here. So the logical thinking here is that I would actually have a sell limit or pending order up there. Price is down here. So I'm looking at this, I'm analyzing this, okay? I think that's a stronger resistance there. This is actually on the euro. And funnily enough, today is actually that same level that we saw on the chart here at 1.0750. That plays out to be a very important role today. But yeah, we're looking at this high here. We anticipate that as a potential resistance. So I expect the market to go up, test that resistance, and then fail, right? This is what happened. So it goes up, it spikes to that level, takes the order, immediately goes down. Is there an advantage to this? There is a huge advantage to this. So let me go back here and let me go back and show you the pound USD that was triggered there in terms of the whipsaw that we have triggered, right? If we take a look at the corridor of volatility here, our stop loss, no matter a buy or a sell, it's going to be the size of that corridor of volatility itself. This is going to be the size of your stop loss. The advantage to using a buy limit or sell limit, because you are targeting that support and resistance level, therefore you are getting it at the lowest risk possible, because your stop loss is basically just going to be above that support or resistance. So you are likely going to have a very small risk, but a huge reward. This is the advantage there, okay? So buy stop and sell stop orders, it gives you more confirmation. It gives you that breakout from the market. But if you're so sure with your analysis, the buy limit and sell limit strategy wins, because the risk to reward ratio is going to be so good. Right? You will take a position that is actually very close to your stop loss. And if you're good at analyzing the market, I would take the limit strategy at any given time. But, in all honesty, this is not a strategy for everyone, because you will need to have a good understanding of the mechanics of the market. Obviously, you need to be really good with technical analysis. So I don't recommend this for beginners, but this should be what every trader try to achieve, right? Because the risk reward ratio is just so good. It's crazy, because you're opening a position very close to your stop loss and your target level is usually very far away. Okay, so that's the buy limit and the sell limit strategy. When do you use this? Typically we use the buy limit and sell limit strategy after the news gets released, right? Last week we were actually looking at some pending orders on the pound USD and the euro USD. So some of those orders got triggered, but we're still not looking at that bounce there. But we typically use the limit strategy after the news release. You can use it before if you want to, but a lot of traders use it after the news gets released. Why? Because they look at that run during the breakout, and typically what happens during a breakout, there's a retest. So that retest that we are waiting for is basically the time to use that buy limit or sell limit strategy. Okay. All right. So let's do a quick test before we wrap up for today. All news can be divided into two categories. What are they? Okay. What are they? News can be divided into two categories. What are they? What type of orders is most often used in news trading? I already stressed this out enough. There's actually one set of orders that are actually used more in news trading. And now, by the end of the session, what are the types of pending orders do you know? And when should each type be used in trading, right? Before, during, after the news, okay? So maybe I'll give you about a minute to try and answer this if you're paying attention to what it is, okay? No wrong mistakes here. Any answers is going to be good. I just want you to start participating in this session so you actually understand about news trading. Again, news trading is not fundamental analysis, so make sure you understand what they are. No take? Okay, everyone's quiet here. All right, I'll give you that answer then. So all news can be divided into two categories. They are the unexpected news and they are the periodic news. Okay, we want to focus on the periodic news, but we're not going to ignore the unexpected news, because unexpected news, we still need to understand what they are, what's the impact onto the market. Okay, but the one that we are trading every single month, and the one that we know the schedules of, they are the periodic news. This is the one that you want to focus on. Okay. Now, what type of orders is most often during news trading? The answer to that is the stop orders. The buy stop and the sell stops are often used during news trading. The pending orders that you should understand now is that we have four: the buy stop, sell stop, the buy limit, the sell limit. You should use the buy stop and the sell stop before the news gets released. And typically with the limit orders, you use that after the news gets released. Okay, so those are the answers for the quiz. Unexpected and unexpected news and periodic news. The stop orders are most often used in news trading. When should you use them? Buy stop and sell stop are employed before the news gets released. Limit orders are typically used after news gets released. Okay. All right. Again, this is the code. If you want to make sure that you get your deposit bonus, use the code NONFARM2024. So open the Octa Trading app or visit our official site, go to your profile, find the promo code section in the menu, enter the promo code, activate it first, and make the deposit. Okay, so make sure you need to activate the promo code before you deposit into your Octa Trading accounts. Promo code expires on the 31st of December 2024, so this is still good for another 6 months. But yeah, might as well use it. You know, double deposit bonus does help with the margin requirement when it comes to your trading. Okay. All right. Any questions so far for tonight? No? Pretty quiet. Okay, but if you have any questions, right, and maybe you're watching this not live and you saw this video, find it useful, you have a question, please comment down below the video, right? Make sure you like and subscribe as well. I don't need to tell you that, but if you have any questions, do type in the comment section, okay? That way, the Octa team can actually reply to your questions if you have any questions. Sometimes I'll look at the comments as well, and if I can help out with the answers, I will help out with the answers. So again, if you're not watching this live and you're watching this sometimes in the future, and you have any questions, you know, make sure and we will be able to provide the answer for you. Okay. Now, usually we actually have the live CPI numbers. This is actually going tomorrow. But we are not going to be able to do that. I'm actually going to be away for my annual leave starting tomorrow, so we are not going to be doing our live CPI trade. But the inflation number is expected to be released tomorrow, and I will discuss this with you right now before we wrap it up for tonight. So I want to talk about the inflation number in terms of what the market is expecting. Market is expecting inflation number to remain flat at 3.4%. This is high. This is still inflation heating up in the US. There are final, leaks, I guess, last minute reports coming in that we could potentially expect a higher inflation number. All right, inflation is expected to heat up. And then the core inflation here is expected to remain at 3.6% or maybe go down to about 3.5%. The core inflation growth expected to remain flat at 0.3%, and the inflation rate is expected to kind of slow down a little bit from 0.3% to 0.1%. This is actually going to be the potential surprise tomorrow. We might not get 0.1%. We might actually get 0.2 or 0.3%. Okay? All right, so there's a question here. Does it mean that news respect technical analysis? In theory, yes. In practice, no. So what happens here, this is where it gets a little bit unique, right? So we look at technical analysis. We create some boundaries. Remember one thing. Technical analysis is information. It's analysis based on information that you already have. News releases sometimes creates a surprise in the market. This surprise is not factored into technical analysis. So this is where I would say it's a yes or no question, right? But I would say, does news respect technical analysis? No. But does technical analysis respect news? Yes. Okay? And then it will create a whole new cycle. We basically need that move. So technical analysis, typically what happens here, we are waiting for something to trigger the market. Right, that's basically what happens. So technical analysis, it's basically warming up, and then the news release basically moves the market, sometimes according to a technical analysis. But if there's a surprise in the market, a very significant surprise in the market that disappoints or really surprises the market, that would actually cancel out any technical analysis. So this is why sometimes during news releases, all your analysis could go off, right? Sometimes it doesn't follow anything during news releases until everything calms down, okay? So this is why a lot of people that don't like news trading, they will look at news as a very high volatile event. Some traders, the longer term traders, actually tend to avoid news trading. If you're a swing trader, you typically want to avoid these news traders, right? News trading is typically for intraday traders, people that like to scalp the market. That's what they are for, okay? Hopefully that answered your question, Prince. But yeah, that was a really good question. So does news respect technical analysis? We should consider it the other way around, right? Technical analysis respect news sentiment that was created after the news release, right? If the news is as per schedule or as per consensus, then yeah, it will respect the technical analysis. But if the news release is actually a surprise in the market, then it could potentially cancel out your analysis. So think about it very carefully. And this is why news trading sometimes could be very risky as well. All right, cool. You got that, right? It sounds like a very confusing answer, but hopefully you get that. Okay. All right, guys. Let's wrap it up for today, this week, and good luck with the trades this week, especially tomorrow. Again, we have the UK GDP number, the US inflation number. Following the US inflation number, end of the day in the US, you're gonna get the FOMC meeting decision. Obviously, data from last week, labor data during the FE and the unemployment rate. That's going to be factored into the meeting tomorrow. And the latest CPI number, even though it's released maybe 5-6 hours before the the announcement of the result, they're still going to use that and factor in, last minute changes in their FOMC decision. Okay, so we'll see what happens tomorrow. Do we expect any surprise rate cut tomorrow from the FOMC? No, but we definitely want to watch out for their statement if they mention anything that might be out of the ordinary. All right, so with that, good luck to the trade, guys, for the month of June, and I will